Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you already haven't, and just wanted to do a disclaimer. Nothing should be construed as financial investment advice. These are just my opinions and thoughts. Read more below. I have a disclaimer. And anyway, let's get into today's stuff. I found a lot of interesting stuff, and let's get into it. Uh, Inflation, which came in more than expected, but the markets liked it because it was not nearly as bad as the last reading. But PPI 4%, consensus was 3, core PPI 3%. So that came in, that was as expected, and the jobless claims, that's good data, 213 below the consensus. Continuous jobless claims, 30,000 below the consensus. And they were talking about the Trump tariffs today and the delayed implementation. The data is mixed and solid, and it's not really rocking the boat. And I think that's why it's going up. People say the macro is bad, so don't list the macro because you're, what's it called again? Oh, yeah, the technicals are what matter, but the macro is not bad. That's the thing. There is like sensationalism, but to dig down to it, it's not. I mean, a lot of people just they don't want to practice honesty. Then they become stupid and tribal with ideologies and be like, "Oh no, this is the only way." So anyway, it's not true. You can see, look at this. Initial jobs claims less than expected. So, but you can when you dig in details into found this interesting. I'll look at this. Americans are finding it harder and harder to pay off their debt, which means they're finding harder, but we're not at the crash yet. My estimation was later this year we'd start to see problems, but it could be next year. Don't quote me on that. I'm just sort of looking at it. And of course, it's unreal that this doesn't get much. And this is what I said. With Trump in office, I think they're going to start becoming more honest about the economy. But overall debt levels increased by 0.5%, and major loan categories tracked saw increases as well. Credit card balances that increased by 7.3%, but it is the smallest increase. But there's so much that, how often can you borrow? And this is in my opinion, this is a result of inflation. But look at this. Higher levels of household debt are expected as population growth, strong economic conditions, and holiday-related spending. Like, this is the thing. This is not a sign of strong debt. People will be paying down their debt if it was a strong economy. So I hate the Peter Schiff talk, but he is right. A high levels of debt is actually a sign of weakness because eventually they'll be turned into default. So, and Americans appear to having more difficulty with that debt. Look at this. I talk about on this channel the four loans, auto loans, and credit cards. I talk about the commercial real estate. Look at share of households becoming seriously delinquent on auto loans and credit cards are 14-year highs. So, so yeah, you can see it. The auto loans and credit card loans, those are about to break. And look at this. Look at this quote. News about the auto loans is troubling. I'm highlighting it for you. Uh, and look at that. That appears to be the case with credit cards. Fed Bank, Federal Reserve Bank of Philadelphia accounts where people just made minimum payments climbed to a 12-year high. That means if they're only making the minimum, that means they can't afford more. So that is not a good. Pretty soon they're going to have So right now, though, taking up an increasingly greater share of available credit. The economic data, I think the stock market still will pump for at least a year because they're not the data hasn't dry, the not the data the debt hasn't dried up yet, or they're not. So that's pretty soon though. We're gonna get to the point. But as you can see, the minimum payments, they're gonna start becoming hard. And but yeah, look at this. They put their little Americans are doing okay financially, but it won't take much for things to get scary. And look at this. Growing ranks of experienced long-term unemployment, particularly those in the white-collar industries. And I said this is going to happen, and it's going to happen, especially with all these visa programs with the H-1Bs and H-2Bs are like waiters, bartenders. But with all these other visas that they're actually looking to expand, it's going to be harder to find. So this is a trend that's going to continue and it's going to be bad and it's going to come into the stock market in a year or so. Um, I would say no, minimum earliest late this year. And if it's not, I think it'll start next year. But we'll see. I could be wrong. That's one reason I'm not topping is the market is insane. I do think it'll go to the S&P 6,500, 6,700 first, but this is going to be the thing is this is going to be the beginning of like a 15 to 20 year bear market. Uh, Donald Trump signs plan. See, this is the thing, delayed reciprocal tariffs. That's what they do. This is how they pump the market up. They also do it rhetorically, not just monetarily. So, and this is one reason I say not all news is interpreted correctly. On the surface, Jeff Bezos laying off 1,400 employees. A lot of people say, "Oh, that's horrible. It means the economy is doing well. The company needs to be downsized now." No, he's just going to hire. He's probably firing Americans and then going to hire foreign workers about 6 to 8 months later. So doesn't mean the economy is doing poorly. It doesn't mean this, but he is laying 10% of his staff off. Uh, but yeah, I would not pay attention to this in terms of the market. So, but if you want more proof that the market is coming to euphoria, look at this. Daily options volumes hit a record. So if you look at this chart here, total options volume, this is where we're at right now. Eventually, this is going to turn in, even if non-economic or any of those numbers, eventually all this buying is going to turn into selling. So just remember that. Here's another bubble, but here it is. This is mortgage will be impossible to forget. The Fed wants you homeless, and that's the truth. Growing for industry insurance makes it hard for in the coming decades. Hard to get a mortgage. Yeah, there it is. In the coming decades. So I was like, industry insurance? I was like, so, and that's the thing. Insurance has gone up drastically a lot. I'm just talking about this. And look at this. Insurers are canceling policies and really hard stuff. So that means if your house gets destroyed, you have no insurance on it. So you're going to lose a lot, but the mortgage is still there. So, but the thing is, if insurance if people in insurance, this is what this article misses, and it talks about how, but if people are unable to get insurance, then the home prices are going to have to come down a lot because a lot of people aren't going to pay money and then their home gets destroyed and they still have one big mortgage. They're just going to default. So that is what this whole thing was missing. Uh, but yeah, the Fed wants you homeless. And here's another sign, just the economy, people are struggling. Number of Americans, and I talked about this before, working multiple jobs is at an all-time high. So here it is, right here. This was 2020, it's probably all the layoffs. And then 2008, it's probably impossible to get a job, no one was hiring. But then 2008, look at this was around the tech bubble. And now we're here. So if you look at it, just looking at history, late 90s, we had the tech bubble, 2008, the GFC, Great Financial Crisis, 2020. So it's not perfect, but as you can see, and then the fear and greed index, now it's going to neutral. So until market keeps going up, when market goes to sort of here, where is this? Extreme greed. This is when I think there'll be a correction. Like right now, neutral. This is good sentiment for the market, and the market will continue to go up as it'll probably continue to go up. Look at gold. Let's look at the market and stuff today before I sign off. You know, Dow Jones 342, S&P 63. And my target's around 65 to 7,000, actually. I'm going to change that. Still going. I think they're going to do whatever they can. But look at gold. My target, I think it'll break 3,000, then it'll top probably around 4,000. The miners have to go astronomically high, but gold was up 0.99% today. Big day for gold. I think it will continue. But that's all. Just the march along. And that's all I have today. Just remember the disclaimer. Remember the disclaimer. Nothing should be construed as financial investment advice. And tomorrow is Valentine's Day. I will not be doing a video. I also got engaged. I forget the exact year. I think 5 or 6 years ago today. It's 2025, so 4 years ago, 4 to 5. Today, I've been married for 3 to 4 years. Forget the exact. I remember my date though. I just don't want to go publicly announce it, but yeah. So happy Valentine's Day to you all. Don't forget about your loved ones. And I will not forget, I've been single for a long time. For all you single folks, I hope it's not too bad. Maybe go to a bar and see if they can find another single person. And if not, it's only one day. If it's still tough for you, just remember Saturday it won't be Valentine's Day anymore. So let's not forget about the single people. At least the ones I know, this is a tough day for them. Just keep at it, keep going, hope, there's always hope. So anyway, hit that like button, subscribe, and I will see you next week.